What's up, you guys? It's January, and what better way to start the year than by setting a benchmark? And in today's video, we'll look at where my portfolio and my investments currently stand. If you're new here, my name is Ron, and welcome to Pinoy Stock Investor. Okay, starting with the whole overview of the portfolio. Currently, we have a total value of $187,769. This value is actually divided into three accounts. One is my taxable account, next is the Roth IRA, and the other one is my rollover IRA. Starting with my taxable account, it is currently at $124,385. Next is my Roth IRA. It is currently at $27,371. And lastly, my rollover IRA, which is my 401k previously, and this value is at $36,011. So the grand total of $187,769. This is a great day to start the benchmark because all the indices and the market is actually down by at least 2%, and my portfolio is down by 2.12%. Okay, starting with the main portfolio, as I call it, we have a total of $124,285. Looking at its performance, let's start with the year-to-date. Year-to-date, I'm currently down by 1.41%, while the S&P 500 is up by 1.44%, which is already negative. So next is the 1 year performance. Looking at it, we have 13.97%. We're up by 13.97% compared to the S&P 500's 18.39%. Next is the 5-year performance. So before, we don't have this 5-year performance because since I started investing in Robinhood and then I transferred my portfolio to Fidelity. So right now, it just recently updated the data and have a whole 5-year data that where it can see the performance. So my 5-year cumulative pre-tax return is 75.29%. Comparing it to the S&P 500's 5-year 5-year return, and it's 98.20%. As you can see, the S&P 500 is totally beating us. Okay, moving on. Let's look at each stocks in this portfolio. So there's a lot of changes that happened, and I've been consolidating my portfolio into a more concentrated portfolio wherein these are the companies that I can focus on. I can look at their earnings every time, and I can monitor them on a day-to-day basis. I mean, I don't do that day-to-day, but I can monitor them regularly without being overwhelmed. Okay, starting with MasterCard. So right now, this is the newest addition to the portfolio. MasterCard, we currently own 11.58 shares of MasterCard with an average cost of $536.82. We have a total value of $6,157.54. We are currently down by $58.88, which is really great because we can buy MasterCard more and pull down our cost basis. Okay, next is Visa. Currently, we have a total of 24.84 shares of Visa with a total value of $8,093. Our average cost basis is $283.83. And our total gain is $1,042.99. We are currently up by 14.79%, which is really great. These two companies are almost similar, but I'm trying to increase my exposure in MasterCard since I have MasterCard at 4.95% of the portfolio and Visa is at 6.51%. I want to at least put MasterCard at least into 5 to 6% of the portfolio. Okay, next is Uber, which is one of the companies that I really love, and I'm trying to increase my position in this one too. We currently own 97.411 shares and a total value of $8,155.24. Our average cost is 79.81%. I actually bought Uber back in 2025 at $81.20, and I averaged down, so buying it while it was down, and I was able to pull it all the way down to $79.81 until today. Today, Uber is at $83.72 per share, which makes us up by 4.90%, and that's total value of $381.17. Next is, would you believe that it's Amazon, which is the one that I'm trying to build up, which is the position that I'm trying to build up right now. So looking at Amazon, we are currently at $15,774. The number of shares that I own is 68.28 shares with an average cost of $194.12. Currently, the price of Amazon is $231, which makes us up, or which puts us to $2,518 up, or 18.99%. It's about like almost 20% up in this investment. I bought Amazon back in June 2024, and the first cost basis that I bought is $183. So we've been buying it consistently while it's up, so our cost basis also increased. Next, so Uber is about 56% of the portfolio, and Amazon is about 12.68%. And I'm trying to push that up to 16%. Now, next on our list is Microsoft, which is the current price of Microsoft is $454.52. And currently, we own 45.4 shares of Microsoft with an average cost of $319.44. The total value of Microsoft that we own is $20,635, with a total gain of $6,132. We are currently up by 42.28%, and it's really great because the first shares that we bought of Microsoft is back in April 24, 2020 at $175, and right now I'm already up. My cost basis is already up to $319, and the price of the company is actually at $454. So that is a really great way to see where you came from. And currently, Microsoft is 16.59% of the portfolio. But before we move forward, let me know in the comments, what's your starting point this year? Are you just starting your investing journey, or were you up from last year? Feel free to let me know down in the comments. Okay, next company is Berkshire Hathaway, which is one of the companies that I treat as an ETF on my portfolio. Currently, we have a total value of $21,190 of Berkshire Hathaway. We own 43.65 shares of Berkshire Hathaway with an average cost basis of $356.49. We've been investing in Berkshire Hathaway since 2021, and right now our total gain is $5,627 $1,058.57, which is 36.15% up on the green. Okay, next is Apple. This company used to be the first or the top one company in my portfolio, but it's been since overtaken by the next company that we're going to talk about. But right now, let's talk about Apple. We currently own 89.58 shares of Apple, which is, with a total value, it's close to 100 shares already. And I'm trying to reach that 100 shares in Apple. And we have a total value of $22,100 with an average cost basis of $158.45, which is almost double it did reach 255 at certain point. And now it's back to 246, which gives us 7,905.83 cents of total return, and that is about 55.69% up in the green. So, like Microsoft, we've been holding Apple since April 15 back in 2020, and the average cost is like $71. So you can see how I consistently buy Apple, even if it's up, and it pushed my average cost basis up at the same time. But at the same time, its price is always higher than my cost basis. And it just shows you the power of consistency. I think consistent in a sense where I just keep buying Apple, and since it's a high value company and consistent company, it just goes up. I'm not per se saying that Apple just goes up. And there was a point where I am actually in the red and I'm just keep buying so I could also pull down the cost basis. I did reach my negative return back then, and I was just consistent on adding into this company, and I was able to build up this amount of shares that I own, which is 89.58 shares, and I'm really happy on holding this one. And for the top place in our portfolio, which is Google, currently I own 69.18 shares of Google with a total value of $22,278 with an average cost of $167.33. That's a gain of 92.43%, almost double the amount, which is $10,701.42 in the green. I bought Google back in February 2022, when it was $144 back then, and now it's at $322. You can see the consistency of long-term investment in there. You can see how far it come. Now, moving on to our next account, which is the Roth IRA. This is just simple. I only have VOO in this company. I bought it back when it was, my cost basis is 411.43 cents. And I own a total of 43.92 shares of VOO in the Roth IRA account. And we're currently up by $9,299.72, which is 51% of the total value of the investment. That's under the Roth IRA. Next is the rollover IRA. Also, we only have one ETF inside the rollover IRA. Our current value is $36,011. And the one position that we have in the rollover IRA is also VOO. It's a different cost basis because I bought VOO in the rollover IRA later in the consolidation of the accounts. So in the rollover IRA, the cost basis of my VOO is at $526, and I own 57.78 shares of VOO. And currently, I'm up by 18%, 18.44%, which is $5,607.35. Looking back to our taxable account, we have received a total of $4,475.96 of dividends ever since we started investing. If we scroll down, looking at our annual dividends from 2019 up to 2025, you can see that it is going up and then down last year. So 2024, we received $1,111 of dividends. And in 2025, we received $608 in dividends. And this year, our annual projected dividends is $423, which is decreasing because of the shift that we did in the portfolio. The majority of the high-paying dividends companies and ETFs has been liquidated. We sold them and we transitioned and we bought more growth companies in the portfolio. And looking at it, $423 is still a really good amount of dividend. That is $423 that will be added to the dividends that we're going to receive, which will push our portfolio up at least 400 points with $187,769 starting point. This benchmark is a really great start, especially with the 200,000 goal this year. So let me know in the comments what you think. I'm really curious to know what's your opinion about me shifting, or about the shift from dividend growth investing to growth investing. Have you done the same thing, or do you think you're going to do the same thing? Let me know in the comments. And if you get value in this video, don't forget to subscribe and like this video. It's free and it will definitely help my channel. Have a great day and peace.